Hey guys, it's John from That DIY Couple, and today I'm going to be doing a video about the 10 things I wish that I knew before buying our first house. So as a lot of you guys know, Shannon and I have invested in real estate for quite a while, but we actually bought our first house not too long ago. So in 2014 was when we bought our first house. It's the end of 2019 right now. So about 5 years ago, we bought our first place, and we knew nothing about real estate when we bought it. We only knew that we wanted to buy a place to live, and we made a lot of mistakes along the way. So what I want to do is give some practical advice about buying real estate. So this isn't going to be like motivational advice like go out and do it or do whatever. I think you can find that online or in whatever videos. I want to give you actual real advice that you could use when you're going through your real estate buying process. So the first thing that is really important to consider is that everything is negotiable. So when you go into a real estate transaction, you're oftentimes guided by people like brokers, agents, attorneys, title companies, inspectors, all sorts of stuff. And you might get a sense that, oh, well, because there are all these real estate professionals involved, I just have to kind of go with whatever they say or do whatever whatever they want me to do. And although it's definitely useful to follow the advice of real estate professionals, and I'll talk a little bit about that later, realize that everything is negotiable, including the purchase price, the inspection contingency that'll happen on your house, financing, closing dates, all sorts of stuff. So if you want to see if you can get a better deal, or if you want to get something special that has to do with your inspection or your closing date or whatever, just ask for it. Realize that as a buyer, the other side of the transaction is a seller, and the seller could be an individual, could be an estate, a trust, a business, whatever, but there's some human being who's making decisions on the other side of the table. So, if you think that you have some sort of power dynamic over the other side for whatever reason, or you want to get something done for whatever reason, it's definitely okay to ask and have a negotiation about that. That's the nature of a contract, and that's oftentimes why attorneys are involved and people like that. So realize that everything is negotiable. Just because somebody tells you that it isn't or that you can't do something in a certain way doesn't mean it's not negotiable. I have a great example of, we bought a lot of houses from in foreclosure auctions, Fannie Mae, HomePath, that sort of stuff, and we'll always be told, look, they're never going to negotiate, they're never going to give a concession on the property, and 9 times out of 10 we've asked and they've given it to us. We got a $40,000 concession on a property one time, and everybody involved said, don't even bother asking. They'll give you $1,000 at most, and we got $40,000. So it's worth asking. Everything's negotiable. The second big thing is a more specific one, but it's homeowners insurance. So you need homeowners insurance on your house, not only for your own peace of mind, but also to get a mortgage. So most people out there who watch this video are probably going to be buying their house, their first house, with a mortgage. And if you don't have homeowners insurance, you're not going to be able to get a mortgage. And it's not great practice just as a homeowner in general. Oftentimes people leave this to the very end. We left this the first time that we bought a house to the very end. We didn't shop around. We didn't know what we were doing. At the last minute, we were like, oh crap, we have to get homeowners insurance, and we didn't even think about it. So research homeowners insurance, learn what the operative terms are, the prices. Kind of with my first point about things being negotiable, the price, the premiums that you pay in homeowners insurance are all over the place for the same coverage or for very similar coverage. Just depends on the company that you're going with or who's giving you the insurance. You might also want to talk to your lender about what requirements they want to see. So if you're in a flood zone, you might need specific flood insurance, which is an additional policy. If you're in like a hurricane zone or another zone that has natural disasters, you might need insurance for those specific things. So get ahead of this in the process. When you put in an offer in the home, when it gets accepted and you start thinking about financing, all that, you should also think about insurance. We didn't do that the first time we did it, and I think that we wasted money because we just kind of had to get the first policy that made sense for us. The third thing is learning about property taxes. So depending on where you live in the United States, and this video is mostly directed to people buying property in the United States, property taxes could be a very significant part of your payments every year. So in New Jersey, where we live, we have some of the highest property taxes in the entire country. So our monthly payments on our property taxes, in some cases, are almost as much as we pay for the entire mortgage. And it's important to realize that property taxes are changeable. So depending on where you live, when you buy property, that can be an occasion for the tax assessor to come in and tax your property. So if you buy it for a lot more or a lot less than what the property is currently assessed at, your taxes can change a lot. And taxes are also appealable. So if you buy a property and maybe it's assessed at $500,000 and you buy it for $300,000, and there's not an automatic reassessment, you can appeal those taxes. So sometimes a deal that might look really expensive or not that good, or a house that might be out of your budget, but it's out of your budget because the property taxes are so high, you might be able to appeal them if you get it for a lesser price, or you think that they're assessed badly for some reason. And the converse is true too. If a house looks really cheap, or the monthly payments seem really cheap, just know in the back of your mind that at some point it might be the case that either on the sale or on a yearly or every 5 years, 10-year, whatever reassessment, that property, those property taxes can change. So we've appealed property taxes on many of our properties, on our house or primary residence, and it's definitely a thing I would think about and then advocate for doing if you think that you're overassessed. The fourth point is don't underestimate the cost of property repairs and property maintenance. So this is another component that we didn't really think about a lot when we were buying a house. We bought a foreclosure, a bank-owned property, REO property that needed a lot of work and needed a lot of upkeep. And when we first bought, we didn't think about the cost that would be as an additional payment to the house. So we were looking at like our monthly mortgage payment, which is principal, interest, taxes, insurance, but a big component in some cases can be your monthly costs that you have to put in just to maintain the house. So I'm talking about things like snow removal if you live in a place where it snows, or taking care of your lawn if you're not going to do it yourself, repairing things that might break. So not only consider the cost, but consider your own time. Buying a house is a big financial decision, but it's also a big decision in terms of your time, and it's an opportunity to learn. But if you don't have the time or inclination or whatever, you don't want to learn, you're going to just pay somebody else to do that work for you. So even something as simple like a clogged toilet, if you can't figure out, if you can't use a plunger to do it and you have to call a plumber, that could be a couple $100 right there. So budget for that. And one thing that's great to do is to talk to other people who are in the real estate world, or people that are buying houses, and say, how much do you spend in any given year on property maintenance stuff? And try to create a budget based on those numbers. You can even ask the person that you're buying the house from, what are the issues with this house, or what are the dollar amounts that you're paying to just keep stuff operating. And you might be surprised at how much it could be. The fifth thing, which is about the financing process, is that your credit score is really important. So we haven't talked a lot on this channel about the importance of personal credit, and we have adopted recently a kind of debt-phobic philosophy to finances. But if you're buying a house, you're almost certainly going to get a mortgage, and mortgage rates are very dependent on your credit score. They're not dependent on your debt-to-income ratio, although you need a certain debt-to-income ratio to qualify. They're very dependent on your score, which is dependent on things like have you made on-time payments, to some extent your credit card usage, the age of your credit, all sorts of things that go into what a credit score is. So sometimes it can make sense to pay down credit card debt or something like that to increase your credit score, even if that means you're going to put less money down to buy the house. So many people, and I think ourselves included, didn't realize the importance of your credit score to the mortgage application process. And if you're in like a lower tier, if your score is a little bit lower and you get a higher interest rate as a result, you can put it into some 30-year mortgage calculators and see the difference that even a half point or a full percentage point will have over the life of your mortgage. And it can be a humongous amount of money, like tens and tens of thousands of dollars. So if you're thinking about buying a house, I would say get your credit score, know what it is, and if there are ways that you can improve it to get into the sort of best tier, which is usually 720 or above, do that before you start the mortgage process. It's going to save you a ton of money. The sixth point is a little bit related to my point about everything being negotiable, but it's don't interpret the phrase won't as can't, particularly in terms with lenders. So if you're applying for a mortgage and you go to a bank or a mortgage broker or whatever, and you say, hey, I want to buy this house with this amount down, or I have this issue, or I have this whatever, many times that lender or mortgage broker will say, oh, you can't do that. And can't often means that they just won't do it, or their bank or whatever they're representing can't do it. Doesn't mean that it's impossible. There are so many different financing and mortgage programs out there. There are private lenders. There are lenders that are backed by the U.S. government. There are all sorts of different programs out there. I mean, you can just Google different lending products out there for primary homeowners or for investors, and you'll be amazed at how many different things there are out there. So in the same way that everything's negotiable in the transaction sense, so much is negotiable with lenders too. If you go to a lender and you think that you should be able to do a certain type of loan, or you've seen online that other people can do it, but that lender says, oh, it's impossible, it's probably just because that lender individually can't do it. And they're just telling you it's impossible because they don't want to lose your business. So again, this is something where a mortgage broker can be helpful, or just talking to other people who have bought homes or are in the real estate field and say, look, what could I possibly do? You know, maybe your real estate agent or your attorney or someone else like that might be knowledgeable too about it, and you can get some insight into them about what you want to do. But don't interpret the phrase, I can't do that, as an outright no. I would just say it's a lender saying that they won't do that for whatever reason. My seventh point is don't be price insensitive when it comes to closing costs. So this is a big one. When you're buying a house, you might yourself think about things like, okay, what's the amount that I want to pay for my principal, my interest, what am I going to pay for my attorney, what I'm going to do for all these other costs. But there are a ton of costs that come in at the very end of the process that you might have a lot less transparency in. These are things like the title fee costs, costs associated maybe with private mortgage insurance if you're not putting down a certain percentage to buy the house, things like just additional fees that kind of crop up at the end, and they'll all appear in something called a HUD or a CD, closing statement. Really look at those critically, because something that we've noticed almost every time we bought a house and in every transaction I've been involved in is that there are mistakes on these documents. Just because they're prepared by a lawyer or a title company doesn't mean that they're perfect. And it's up to you as the person paying the money out of your pocket to look and make sure that all the fees that you see in these documents are correct. Sometimes people will forget things. Like I've had occasions where I've paid insurance twice accidentally because I paid it before the closing and then again at closing, which could be thousands of dollars right there. So review these documents really carefully. If you have a good attorney, he or she should go through the documents with you in detail before you actually close. But at the end of the day, if there's a mistake in it, it's really you who's going to be paying the money or having to get the money back from somebody else. So make sure that you understand what all the fees are in your closing documents. And if you have any questions, ask the title company or your attorney or whoever is helping you in the process to get some insight into what you're actually paying for, because these fees could be thousands of dollars. You'll be shocked if you buy a house at all these fees that get tacked on at the end. You say, look, I thought I was only going to bring $20,000 to the closing table. Now I have to bring $30,000. That's a big deal. The eighth thing I want to talk about is getting a good attorney. So I am an attorney and I'm a little bit biased, I suppose, because of that fact. But there are a lot of real estate transactions that happen in the U.S. without lawyers. And I think that's a big mistake for two reasons. The first is that very often times in real estate transactions, you're structuring the transaction with a real estate contract, I would say, in almost every case, unless it's between a family member or something. And those documents are complicated. If you haven't seen real estate contracts before, traditional real estate contracts, particularly ones prepared by brokers and agents, are many, many pages long, and they contain really important terms that are not obvious to you if you haven't been through the process. Things like your financing contingency, your inspection contingency, when you're going to close, the mortgage rate that you need to have or that you're seeking to have, what's going to happen to the current occupants if there are tenants, what's going to happen to the state of appliances, of fixtures, of furniture, of all sorts of stuff. And I always highly recommend just getting an attorney to help you in knowing those things, unless you are someone that is really experienced and has gone through this a lot of times. I've been on deals where the seller hasn't had an attorney and I've either represented myself or had an attorney. And those deals are always disasters. They're always disasters because the attorney, similar to a real estate agent or a title company, is going to be someone who pushes the deal along too, because they get paid when the deal closes. So they have an incentive to say, I want the deal to be done. I want the deal to close. So they're going to be the ones bothering the seller, the seller's attorney, the seller's agent, whoever it is, to say, hey, can we move it along? Hey, can we do it? Hey, what's going on? And if you don't have an attorney to do that for you, you are either hoping that your agent is doing it for you, or you yourself have to do that. And that can be really odd and uncomfortable if you've never been through the process before. So yeah, attorneys can be expensive. They can be hundreds of dollars to $1,000+ depending on where you are or what the transaction is, but I highly, highly, highly recommend them. every transaction I've been involved in, it's been 36 plus transactions at this point in my life where there isn't an attorney on both sides, has been a bad transaction, 100%. The ninth thing is ask your neighbors or the people that you're buying the house from about things like snow removal and lawn care, trash removal, all that sort of stuff. Ask them while you're buying the house from them, because we've been in situations where we've bought houses before where we need someone to remove snow and we don't know anybody in that neighborhood or in that area, but all the neighbors around us use the same guy or use the same company or know people that will do that, and that will save you a lot of time and a lot of headache and a lot of problems. It's a lot of times easier just to use somebody who's been doing those services for the house for the previous owner yourself when you buy the house, at least for the first say year that you move in. There might be things that you're not even aware of that you need to take care of. Sometimes people aren't aware that they need to take care of the sidewalk in front of their house in terms of snow, in terms of just making sure it's not uneven, all sorts of stuff. So I would highly recommend exploring these types of people before you actually move in and buy the house. It's going to save you a lot of time and a lot of trouble. We've had a lot of trouble finding reliable snow removal people, reliable lawn care people, all sorts of stuff. I've shoveled so much snow, more than I ever want to do. I've cut so much grass more than I've ever wanted to do. So take care of that stuff. If you're not going to take care of it yourself, figure out who to use early on in the process. It will save you a lot of effort. And the final tip is another specific one about applying for financing. It's be responsive to people involved in the process, particularly your lender. So when we were buying our first house, we had a very aggressive closing schedule for a lot of different reasons. And our lender would ask us information like bank accounts and explanations for various things and all sorts of things that a lender would ask, and they were very overwhelming, and we weren't really on top of some of those requests. We weren't really expecting them. When you buy a house, your lender is going to ask you for a lot of documents, dozens and dozens of documents that are going to go really deeply into your financial history, and a lot of times these are driven by regulations and the bank's underwriting rules and Fannie Mae requirements and all sorts of stuff. But you need to be responsive to that and to responsive to all the parties involved. Oftentimes closing dates for real estate can be anywhere between 45 and 60 days if you have financing like a mortgage. And you might think, oh, that's a long time. But if you're not pushing through this process, it's really not a lot of time at all. You really need to be responsive and on top of your game to get it through. Buying a house is stressful because there's a lot of finances involved, but also because the time involved can be pretty compressed. So be very responsive if you want to buy the home without stress. Again, leaning on an attorney or an experienced real estate agent can be very helpful with saying, okay, here's the timeline, here's what we need to do, here's how we need to push things forward. So those are my top 10 tips. I do buy real estate professionally. I'm an attorney professionally, and I've represented people who have bought and sold real estate. Kind of another component of my online presence is that I have a podcast called the Brick by Brick podcast that I've been doing with my business partner for the past year, and we have episodes just about every week on all sorts of real estate topics. Some are relevant to first-time home buyers, some are relevant to very experienced real estate investors, but we love talking about that. And if you like this type of content, I would encourage you to check that out. It's the Brick by Brick podcast. We'll put a link in the description. It's available on basically every podcast platform that you could find it. I'd love to hear your comments to that podcast. If you'd like, we're going to be expanding some of our social media with that. If you're in the New Jersey area, I also host a meetup every month, and I'll drop a link to that. You're welcome to come and hang out and talk about real estate stuff. I love talking about real estate. So I know on this channel we talk a lot about self-improvement and finances, but for me, real estate is a big component of that, and it's become a big professional thing that I do. So if you have any questions that I can answer about buying a home or investing in property, please let me know, comment down below. I would love to be responsive. You can also email me at thatdiycouple@gmail.com. I'll respond to questions there. In the meantime, thanks for listening. Thanks for watching. Check out the podcast, and we'll have more content like this about real estate in the near future.
Oh.